Well, hello, Blair Nightingale here. It is that time, that place. It's Market Monday, everybody. Excited for tonight, Market Monday, where we come to you wherever you are, at home, on your iPhone, on the go, YouTube viewers, Facebook Live, wherever you are. Happy to be with you here tonight because this is something that I enjoy and look forward to doing every week, helping you understand more and more about the markets. This is Market Monday. So we're talking about the stock market. And we do this every week. For those of you who are joining us for the first time ever, welcome. You may be here live tonight. You may be joining us by recording at some point in the future. We're glad to have you either way. You can see all of the Market Monday broadcasts from the very beginning. That's over a year of content now. You just got to go back on the YouTube page and you'll find all the Market Monday broadcasts. Tonight, we are going to dive into a topic that is literally at the very core of trading. But here's the thing. It says 2 secrets to limiting your losses. And that may, to some of us, sound a little bit like, is it really a secret? Is that just something in the title? But the reality is that most people, a lot of people don't realize, I'm going to shift this over here a little bit just to get rid of that glare. I know that's coming on that TV. Just getting back to the secrets, I know that when people talk about trading, these are actually some things. Remember I said the heart of what trading is. This is something that a lot of us don't think about, talk about, know about, and we certainly don't usually, not always, but we don't usually know that this is the core. Listen, if you're a real trader, if you understand the skill set of trading, and that's what we need to understand if we want to move forward in our goals in trading. Listen, everybody in this broadcast right now, whether you're with us live or you're joining us by the recording, listen, we could all go open a brokerage account, right? We could go open a brokerage account. We heard about GameStop. We've got it on our phone now. We want to go open a brokerage account. We can do that without any prior knowledge, experience, certification, qualification, training. Wall Street will gladly let all of us open up a trading account and send our money to the New York Stock Exchange. People do it every day. If you guys followed me last week on our Thursday show, our Stock Talk, I showed you guys, or at least I gave you guys a link to a graphic that showed that retail traders, you and I, are retail traders, right? That's what Wall Street calls us, not investment banks and hedge funds and so on, mutual funds. That actually, there are so many of us now, retail traders. This is a new thing where our volume traded, right? The volume of shares that are traded day by day on average on the New York Stock Exchange, okay? I'll say that again. Retail traders, the shares bought and sold by retail traders on average now is equaling investment banks. It's close to. It's not quite the same, but it's very close. Investment banks and mutual funds. Now, that's a lot of shares. That's a lot of shares. That's never happened before. What's my point? Hey, listen, more people like you and I are going out to the markets, sending our money to Wall Street than ever before. So, if we can do that, does that make us a trader? Does that make us profitable? You say, well, Blair, I heard about so-and-so and they did a trade and they made money. I heard about so-and-so and they did 3 trades and they made money all 3 times. And I would say this, do they know what they did to make that money? And can they repeat it over in a period of time where it affects their lives? Now, I understand there are spectacular stories, and this is part of the boom and bust nature of the markets. There are certainly people out there, even maybe many. Look at the GameStop story, right? We hear about the winners. Oh, so-and-so made X million dollars and they'll never work again in the stock market. But what they don't talk about is how many other people didn't, how many people lost money. And my concern tonight, my goal for you tonight, it's not to talk down anybody's results. No. That's what I want. I want you to have results. But my work as a trader in my own life and as a teacher right here tonight talking to you, and as I coach the tens of thousands of Tradeway students that we have, is that we would understand what it takes to be consistent over time. Because I don't want you to go out and score a win here and there and really not understand how did that work. If you go back to our very first or one of our very first Market Monday broadcasts, and I've mentioned this a few times over the last few months, we talked about why most traders wash out of the market in the first 12 months. Now, some people use that as an argument to say you shouldn't trade or it doesn't work. Well, I would say that that is an ignorant perspective. I don't mean anything rude by that. It just means that there's an aspect of what's happening that most people aren't aware of. And what that is that people don't understand the disciplines of trading that enable us to continue to trade over time. Because an account that's not defended is an account. Let me try that again. An account that's not defended well, which is what we're going to talk about today, will inevitably be an account that is closed. Okay? If it's not managed well, you may have some winners, but eventually Wall Street will take your money. And what I want to do tonight is help you be in a place where you understand how to not let Wall Street take your money. You're interested in trading, or you wouldn't be here. But what are some key things you need to know? Well, I'm going to give you 2 secrets that I do really believe are secrets. I don't think they have to be, but some secrets are secrets just because they're undervalued. They may not be hidden, but they're undervalued. And I think these are undervalued. That said, before I go off into the material, I want to say tonight, I can see names popping up in the comments. We've got folks from YouTube. We got folks from Facebook. I can see Susan is just tagging like a machine in the comments tonight, just letting anybody else out there who she thinks may want to see this broadcast. You go ahead, you just tag their name right there in the comments. Then they can jump on over and join us, or they can come back and watch the recording. If there's somebody out there that you think would want to see this tonight, go ahead, pop that in there. Susan is taking full advantage of that opportunity. And if, as we're going along, you just want to say hi to me. Some of you guys, I know some of you guys I've not seen on here before, so I'm glad to have you. As I always say, my job is to come on here every Monday, give you something of value for investing your time with me to help you win in the markets. That's what I want to help you do. We've got some familiar faces, as I said, but if we don't, if we've got somebody on here who's not familiar with me or have been on here before, go ahead, drop your name in the comments. Say hi. Let me know where you're at. And if you have any questions, I welcome that. That is my favorite thing. I definitely want to help answer any specific questions that you might have. I'm just reading Susan's comment here. Glad for the timing. I'm having trouble getting to some of the other offerings. I'm not 100% sure which offerings you're talking about, Susan. So if you just want to drop that in the comments there, I'd be happy to help you out. Josh, haven't seen you on here for a while. Glad to see you. Jeffrey, Benjamin. Howdy. I shoveled snow again today. When will spring get to Colorado? Oh, it will come, and it will be beautiful, no doubt. We're having beautiful spring here in Texas right now. But right around the corner from spring is a little something called summer. And in Texas, it's melt your face hot. So I'm glad we're still having some spring. Mario, I see you there as well. YouTube today, glad to have you on here. To all of our users from either one. Okay. Let's see. Bull City Bob, good to see you on here. Thanks for dropping that in. I'm going to head over, look at some of my notes in front of me here as I take you guys through this. I'll come back periodically and look at the comments so that I can interact and engage with you guys. Remember, if you have any questions as I go, please drop those in there. I'd love to have those 2 secrets 2 secrets to limiting your losses. Now, let's stop here for a second because I said something in that sentence that typically makes a lot of people uncomfortable. What would that be? Well, it's probably obvious. 2 secrets to limiting your losses. You say, whoa, wait a second. If I learn to trade, doesn't that mean that I do not have losses? Ultimately, I want to get so good at trading that I can trade and know what the market's going to do, that I can get so good at trading and I don't have any losses, right? That can easily be the thinking. But none of those things are possible. I'm just going to say this flat out tonight. Now, this is not one of the 2 secrets, but I'm going to tell you right now, if you want to learn to trade, there are going to be losses and you'll never know what the market is going to do. You say, whoa, did the ground just fall out from underneath our feet? How does this work if I don't know? That's why I'm reading CNBC. That's why I listen to Jim Cramer. That's why I have that newsletter. And we could just go down the list of things that you, maybe that's not something you're doing, but that is something that this industry is built around those things, giving us some kind of an idea that somehow we can avoid all of our losses. And somehow, if I could just figure out what the market is going to do, that's how I'm going to make money. But I'm here to help you understand, and this is good news. You do not need to know what the market is going to do in order to make money. You do not need to know what the market's going to do. And that's a good thing because there is no way for you and I to know exactly what the market is going to do. This is important tonight, guys, because I'm framing for you what trading really is. And this is something that's not talked about. If anybody ever comes on your screen and says that they can show you what the market is going to do, not what it's likely to do, but they tell you this is what it will do, then you have a reason to not believe that individual, to distrust what that individual is saying, because there really is no way that they can know what's going to happen. But at Tradeway, what we do is teach you what the job of a trader truly is. And that sets us up for our 2 secrets tonight. The job of a trader. What is the real job of a trader? That's the question I have for everybody out there tonight. If you're watching on the recording, just take a second and just think about this for a second. Okay? Allow yourself to give whatever your authentic answer is to this question. What is the job of a trader? Okay? When you get a job, you go to the job, there are specific things you have to do. Ultimately, at the end of the day, the week, the month, the quarter, certain things have to be accomplished. What is the job of a stock trader? That would be my question. Now, I know the comments takes a moment for those to pop through usually. I see your comment there, Jeffrey. I'll come back to that. But I want us to think, what do I believe is the job of a trader? Well, like many jobs, there are multiple levels to that answer, isn't there? Josh popped his I'm actually going to just put it up here quick. Josh has been around a little bit, and Josh knows what he's talking about. He says that the goal is to manage risk. Look at this. I'm going to put this up too. Susan said to look for patterns and take advantage of them. Is Susan incorrect? No. That's part of what we teach at Tradeway. And I would say I just showed you 2 answers. Manage risk, look for patterns and take advantage of them. Nancy said what 99% of people are thinking. Make money. And let's be real here, right? If this isn't about making any money, what's the point, right? That's what we're doing this for. So these are all good answers. But remember what I said at the very beginning of tonight's broadcast. This thing is at the absolute heart of trading. And that's why it's so important for you to know. This is something you need to know. And I'm giving you that tonight. And this is the heart of trading. It's managing risk. Because let's think about our other answers for a second. I love that everybody's getting involved and throwing in these answers. Because if you learn to manage risk, which what's our show tonight? 2 secrets to limiting your losses. If you learn to manage risk, I'm telling you guys, I work with a lot of traders. I've done a lot of trading. This is so important. This is what separates those who stick around to those who go down in flames. Okay? Managing risk is your number one job as a trader. Now, here's the thing. Think about what Nancy said. Well, actually, it's make money, Blair. Well, I would tell you this. Those who seek to make money first and manage risk second end up almost entirely in the crew that wash out before they see the success that they could potentially see in the markets, right? They wash out because they don't protect their account. So if I manage risk first, if I focus on process before I focus on profit, that's how traders really start to move forward. And if you remember Susan's answer to look for patterns and take advantage of them, that's one of the ways we manage risk. So looking for patterns and taking advantage of them is a huge part of it. We've looked at that on here some for Market Monday, but it's connected to managing risk. Jeffrey says preserve capital. You guys are reading my notes, okay? Preserve capital. How can you trade if you don't have any money? You say, well, I just saw this opportunity, man. I just bet the farm. I put the whole house on it. And if this thing wins, man, that's it. I'm going to make so much money. And then what happens? One of 2 things happens. Scenario number 1, you lose it all. It's gone. Now you can't trade. And maybe you quit. Maybe you never come back. That's scenario number 1. Number 2 is you do make the big payoff. Whoa, huge payoff. This is easy. I can do this. I'm going to put it all again next time. Sooner or later, that coin toss, which is not trading, that coin toss is not trading. That's something I got to tell myself over and over. Remind myself it's never guessing, gambling, or going for it. Never. That's not trading. You could make money guessing, gambling, or going for it. But in scenario 2, it's just going to strengthen approaching the markets like a coin toss. That is not protecting your capital, because once your capital is gone, then the trading is over unless you put more money in there. But then guess what? You put more money in the markets, but you still haven't resolved the main issue, which is that the core job of a trader is to preserve capital and to manage risk. So, of course, the question is, well, how do I do that? How do I manage risk well? And, of course, there are lots of answers, but I told you I'm going to give you 2 answers that I think are way undervalued, so much so that you could even call them a secret. We have to focus, as I said, on the process and not on the profit. Let the profit be the fruit of what you do, not the focus of what you do. Okay? So we have to limit losses. We've talked about that being the key job. Let's look at 2 specific tools that help us do that, okay? And for those of you out there who've not gone over any of this, and this is new, I would recommend writing this down, okay? This is good information to get in mind. Write this down because this is so important. These are 2 really huge things that you can do to limit your losses. And as I said, you are going to have losses. The greatest traders in the world take losses. But you know what they do? They take losses well. They take losses really well. In fact, someone said, as a trader, as a professional trader, you've got to become a good loser. You've got to become a good loser. Well, what are 2 ways we can do that? Well, number 1, here it is. You can write it down. This is the most amazing tool that so many people don't even know exists. Number 1, 2 secrets Stop loss. Use a stop loss. Use a stop loss. You say, Blair, what's a stop loss? I've never heard of that. A stop loss, as you can imagine from the title, is a specific kind of order that you and I can use in our brokerage account. Now, remember, a brokerage account is basically a bank account for stocks. If you had Robinhood on your phone, you would have a brokerage account. Now, I don't necessarily recommend Robinhood. I know it's very popular. I've talked about that on a different broadcast. Tradeway, we specifically use Tastyworks. Tastyworks is a broker out there. It is a inexpensive, high-performance brokerage firm that comes from people who really understand trading, and it has good customer service. And I know that because I've tested it. I've had to use it because I use Tastyworks. I don't get anything from you if you sign up for Tastyworks, but I know that this is a good company. So I say that that's a brokerage firm. So I could go into my Tastyworks account and I could purchase a stock. Let's say I purchase XYZ stock. Okay. Now, if I purchase XYZ stock at $25, once I purchase, let's say I purchase a single share, okay, my brokerage account is going to charge me a fee, okay? They'll let me buy as many shares as I want, but they'll charge me a fee. If I buy one share, they may charge me $3, okay? If I buy 50 shares, still the same price, okay? So that's a little bit of a review on the brokerage account. Once I purchase the shares, then I can put in what's called an automatic sell order, or also known as a stop loss. Now, what does a stop loss do? Well, it literally stops the loss. So if I purchase the stock at easy numbers, $10, once I purchase one share of XYZ stock at $10, I can go and put in a stop loss at $9.50. Now, we have some specific rules about how and where we put the stop loss. Why would I choose $9.50? Why not $9.80? Why not $9? That's some of the specifics, but the basic here today is stop losses stop your losses. If the stock does not do what you want it to do, you and I can predetermine. We can decide before we ever buy the stock, where do I want to stop out the stock? That's how I say it, right? It's a stop out, but I am going to stop out. Or I might say it this way. I'm going to take a stop out on the trade. I'm going to stop out of this trade, right? These are some of the different ways as traders we say this, but what we mean is we're using the stop out. And what's cool about this order is that you can actually, once you've purchased the stock, you can actually set the order, and I like to say set it and forget it. Right? You can set it and forget it. You can set that sell order at $9.50. I purchased it at $10. I'm looking for a sell point of $11. And if it goes against me, which do you have any control over that stock once you get in? Right? No, you don't have any control over that stock once you get in. Some people, they yell at their computer screen like maybe it can hear them. But I promise you, you have no control over that stock. Neither do I, right? Neither do I. It's now up to the rest of the traders in the world that are buying and selling that stock to drive the price higher or not. But as we saw earlier, Susan's answer to look for patterns and take advantage of them, right? If we use the system that we teach here at Tradeway well to understand what to trade, when to trade it, and how to do that safely, then once we enter into the trade, we can see whether or not that pattern continues. But what if the pattern does not continue? That's where the stop loss comes into play. And here's the thing I want to say about this. The stop loss sets us up to win big, lose little. You can take losses, even consistent losses, and over a series of trades, come out ahead. Because why? Because you and I took small losses when the stock didn't do what we wanted it to do. And when it did do what we wanted it to do, we allowed those winners to go to the target price that we had set. Okay. Where to set that target price, that's a separate conversation. Today, the biggest thing is understanding limiting the losses. We have to set a target price. We said the job of a trader is to make money, isn't it? And of course, it's true. I'm not going to say that it's not, because it's a secondary focus, and it is a secondary focus, but it's still very important. Of course, that's why we are taking the risk. But if we don't manage the risk well, then the profits can get away from us in a negative way very quickly. Stop outs help us manage that. Stop outs help us define, before we even get in the trade, how much am I willing to risk here to see if this trade is going to work? You say, well, Blair, what do you mean if the trade's going to work? Well, remember what I said. We can't know what the stock is going to do. We can only know when there's an advantage present. See, once you and I are trained to look at a stock chart and see when an advantage is present, you could go and look at 100 stock charts tonight. If you have not yet been trained how to see the advantages, they are right in front of you. It's like before we ever learned to read. The words were there. We could read the street signs. We could see the billboards, but we just didn't know how to organize them yet, right? It's a similar concept. It's right in front of us. We just can't see it yet. Well, what we need to do is be able to recognize when an advantage is present, and then we go, how much is this worth? Seeing if it's going to work. I'm telling you, this is good stuff. That is trading. If it goes beyond what I think it is worth to do, then I stop out of the trade. We like to say it this way. I live to trade another day. I'm just going to pause there. That's number one. We got a lot of comments flowing in here, so I want to make sure I hit on some of these. Losses turn into opportunities, Josh says. Losses can turn into opportunities when we learn from them. I'll say this really quickly. One of our coaches says a business has expenses. Can a business take a loss? Yes, a business can take a loss. If a business takes too many losses without revenue, what happens to that business? It goes out of business. Okay. But businesses that are healthy have expenses. What's the main difference though? An expense is something where you pay money and you get something for it. So if you ever stop out of a trade, at Tradeway, what we try to do as coaches is work with you to help you understand, what did I take out of that trade? Did I learn something? Did I get something from this trade? And you can get something from every single trade if you know what to look for. That is not a loss. That is an expense. Something came in, even though money went out, something came in that strengthened your business. And as a trader with an at-home business in the stock market, you can get something for every expense. But if you take a loss, that means you didn't get anything for it. It means it was bigger than it was supposed to be, and you didn't get anything for it. Building self-confidence and trust with yourself is one of the biggest things you get for expenses. If we don't stop out, if we don't follow that, then we actually break down that confidence we have in ourselves, and it is a loss. It's a loss and not an expense. When a business spends money and doesn't get anything in return, that's the difference. So Josh says losses turn into opportunities. When we stop out, we stop it from being a loss. We turn it into an expense, and we always get something for the expense as the CEOs of our trading company. So thank you for that. Josh also says, don't use Robinhood. I speak from experience. I've had it. I've never actively traded on it, but I know there's been a lot of concerns about customer service. People say, well, it's something I want to use because it's free. Listen, there are brokers out there. I mentioned Tastyworks. It is so darn close to free that it's not worth sacrificing something as important, especially for a new trader, as customer service when it's so inexpensive anyway. So, Tastyworks, I believe, is around $3 to get into a stock trade, will not cost you anything to get out. And it's $1 a contract for those of you who are options traders. It's $1 a contract to get in. And again, no closing fees. But there, Josh says, I speak from experience. Troy says, for the new folks, Tastyworks brokerage platform is better with a desktop. The laptop platform has only 3 very small chats, not good. And I've used the online platform quite a bit as well myself. Vince Lombardi quoted, championships are won with defense, right? The old saying, right? A good defense is offense. So stockpile in the good times. Yes. All right. Let's get to number 2, right? Great comments. I love it. I love that stuff. Lets me know where you guys are at. But I said there's two, right? So the first one is stopping out. Even out there today, you say, basic, stopping out, basic. I don't think there's a trader out there that we could overemphasize and I'm going to say it this way, galvanize you to the importance of stopping out, getting better with your stop out rules, getting more confident with your self-management. Because I'll tell you what, who has to actually do the stopping out? You do. So if you can't trust you to stop out, there's nobody else to pick up that slack. It all comes down to you and me. So that is an extremely important lesson, one that I can't hear too much. 2, what's the next one? The next one is 2 secrets to limiting your losses. This one is huge. In fact, I have an entire program at Tradeway that talks about this specific point in limiting your losses and maximizing your gains. I mean, limiting your losses is really about maximizing your account, protecting your capital, and getting you into opportunities that are opportunities that have an advantage, cutting the ones that aren't working and letting the ones that are working run. So it's about making profits, but it's about managing those losses so that you're around to do that. Number 2, control your emotions. Okay, that's number 2. Control your emotions. Now, as I said, I have a whole program around this. There are so many, and there's many others at Tradeway that touch on this regularly because emotions are such a part of the trading experience. Why? Because we're human beings. We're human beings making decisions attached to our money. And depending on our expectations of trading, your attachment to money in trading is attached to what you'd like to do with that money, what you'd like to prove with that money, what you'd like to give with that money, what you'd like to save with that money. Whatever it is, there's an intense, can be emotional charge to trading. Why? Because for many of us, it's seen as a doorway to the life we truly like to live. Now, that may be different for each one of us on this broadcast tonight, but that is ultimately why we are drawn to trading. 99%, if not 100% of the time, that is the case. So it can be very emotional, but the markets are designed. Okay, Wall Street is designed. It works to specifically prey upon the emotions of traders. Alexander Elder, a famous trading coach, said an emotional trader is a dead trader. What did he mean by that? He meant the system will take advantage of your emotions. It knows how to trigger them. It knows how to take advantage of them. Anybody out there ever felt like, man, as soon as I get out, it goes up. As soon as I get in, it goes down. That's something we help you understand how to manage because the markets are designed to make traders feel like that. And the way they do that is by manipulating and triggering emotions. Now, of course, they're not in our home. They're not feeding us false information. I don't mean it like that, but they have the markets moving in ways that are designed to take advantage of traders' emotions. And I've said that now. So what do we need to do? Okay, we need to understand how emotions affect trading. This is where I could go into a very deep conversation. And I love this conversation because it really is such a huge part of my journey as a trader, and it helps people understand what's happening. I always like to say there is a car, there's road conditions, and there's a driver. When you think about that, the car is the trading system that you learn to use. The road conditions are the market conditions, but the driver is the one who has to make the decisions, about the car, the brakes, the gas, the lights, the steering, the windshield, the upkeep, the road conditions, the speed, the turns. Everything comes down to the driver, and that is an emotional aspect of trading. So we've got to control emotions. We've got to control fear and greed. Those are the main ones. We've got to control fear and greed. Now, we mentioned the stop loss. The stop loss is a great way to do that, okay? But there's some other things I think we can cover here that are very useful. The biggest one I want to bring today is that we have a plan, okay? This is something that emotions, when they run wild in the markets, the last thing they tend to be concerned about doing is planning the trade. You guys have probably heard of FOMO. Somebody can pop in the comments there. Let everybody know. What does FOMO mean? Because FOMO is something that comes up in the markets all the time. It's fear. Now, there are obviously different kinds of fear, but emotions will do crazy things to people in the market. When you are losing in the market, if you are feeling very emotional about not winning in that particular trade, and you must win, this must be profitable. I'll feel terrible if I take a loss. I do not want to stop out. Then what happens? You're getting all emotional, and the trade is losing. And what ends up happening is our emotions drive a losing trade to be a trade that we keep going. The losing trade is the one that should be cut off, but the emotions can get in the way. Let's flip the scenario, right? The stock is running, and one of two things happens when students encounter that scenario. Whoa, I'm making great money on this trade. This is fantastic. I'm not going to take this trade off. It's doing great. I'm going to let it run. Okay, and we do want you to let it run in that we don't want to cut winners too early. I'm going to talk about that in a second. But at some point, if you never sell, you take on too much risk. What drives that? Emotions. Seen it happen. I've seen it happen, guys. I'm telling you, I've talked to students. They say, man, if I would just capture profits better, not let emotions take over, I would actually get out of the trade. In fact, some of us are letting the winners turn into losers because when it's going up, we get so excited about what's happening, we don't want to take it off the table. Just a little bit longer. Or, remember I said one of two things. The second thing that happens is as soon as you have a winner, you take it off the table. I'm making money. Take it off the table. I don't want to give it back. Oh, this is amazing. And what do you end up doing? Small winners, big losers. Small winners, big losers. And over time, you're not getting ahead. What's driving that? Emotions. Now, there's some beliefs and things there that we go into deeper in other programs, but it's really emotionally driven. Those are just two examples, but I can promise you that emotions are a huge part of it. So if you want to tap into a secret to limit your losses, listen, you have got to understand that emotions must be controlled. You say, okay, Blair, that's fine and great and all well, but what do I do to control those emotions? Well, number one, I would say having understanding is huge, and that's what I just mentioned. But number two, practically, I want you to know how to use a plan. When you are trading, you'll notice a lot of people, and I'm picking on Robinhood tonight. I don't necessarily mean to be taking shots at Robinhood, but I know it's very trendy, right? It's very popular right now. Pop up my Robinhood and I have people ask me sometimes, I just jumped into this stock or I just jumped into that stock, and that's fine. Somebody taking money that they're okay taking a loss on, risking that money, they can do with their money as they see fit. However, I would just say tonight, for our sake, that's not trading. Okay, that's different. That's throwing money at the market. That's investing in a company that you might like. It's not actually trading. Trading is taking advantage of those price movements over and over and over and over for our benefit, right? That's the goal. So trading is different than that. But somebody might say, well, I just put some money into this. What they don't have is a plan. They don't have a plan. So I'm going to give you a very simple structure for the very basic plan. And I say it like that, basic, because I think sometimes we think it has to be more complicated than this. And there are some moving parts we could add to it. But really, when I talk about having a plan in order to control emotions, this is the foundation. Think of the three-legged table. We talk about this at Tradeway a lot because we've got a couple things where there are three-legged tables. It helps us understand. If you take a leg off a three-legged table, what's going to happen? It's going to fall over. It's going to fall over. So you got to have at least these three legs on this table, okay? For my note takers, here they are. And it's very basic. We've talked about two of them already. In fact, in some ways, we've talked about all of them already. You want to know before you do this, okay? Before you ever do this, you want to know, what am I going to buy the stock at? What is the price I will purchase this stock? Okay. Those of you out here who are in our programs, right? You've heard us say this 1,000 times. You've got to know, where am I going to buy it? Okay. What on this chart is going to tell me now is the time to buy the stock? Never guessing, gambling, or going for it. Throwing darts at the board. I want to know, where am I going to buy it? Why? That's the first number. That's a part of a plan. One leg on the table. Okay. 2, what's the target? What's the target? What's the point at which I'm going to sell it? That's what I'm looking for. Sell point. Where am I going to sell this stock? But what did I say was the most important one? What's the most important one? The most important one is, where's my stop out going to be? And of course, you calculate your stop out when you know your buy point, right? If I'm going to enter here, I'll stop out there. And then you got to ask yourself, is that price, right? $10, $9.50, 50 cents per share. 50 cents per share. If I buy one share at $10 and I stop it out at $9.50, that costs me 50 cents. If I buy 1,000 shares, right, you got to factor, it's not going to be 50 cents, right? That's times 1,000 shares. So we've got to keep that in mind. But when you know your buy point and your stop out, you can manage the risk. Why? Because you've defined the risk. You've defined the risk. Okay, now here is the crown of what we're talking about tonight. I'm going to give this to you guys tonight. Listen, this seems like it would be so obvious, but when I first heard this as a trader, I went, oh my goodness, why wasn't I thinking this way? I know I've done trades where I was not thinking that way. And I'm going to give you guys this tonight. This is for free, and this is helpful. Okay, this is helpful. Think about the scenario I just told you. And I want you to think this every time you look at a trade. Get into a trade, consider a trade. This is something you're going to do. Okay, this is something you're going to do. I'm going to say, all right, here's my buy point, because I got to have a basic plan. Now, this is going to manage emotions. Why? Because my emotions are going to kick in when I'm in the trade and tell me all kinds of things that I should or shouldn't do. But I already made a plan. I already made a plan. I know what I'm going to do. I'm not going to react to the market. I'm going to respond to my plan. I'm not going to react to the market. I'm going to respond to my plan. Now, I said I was going to give you one more thing special. You're going to do this every time you do a trade. If you want to serve yourself so that you can have breakthrough, right? This is really important. So what you're going to do is, this is my buy point. This is my sell. This is my stop out. That distance is your risk in the trade. Now, you can, in any trade, theoretically, you can lose everything you put into the trade. It is theoretically possible. But when we use the stop out to stop our losses, this is where we can define the risk. So $10 I got in, $9.50 I got out. I set a sell point at, let's say, $10.50. Now let me take you through this quick, and then we'll take some questions if we've got them, and we're going to wrap up tonight because we're just about 45 minutes here. What did I just say? I said a scenario that has 50 cents of risk and a 50-cent potential profit. Risk return is 1-to-1 in that scenario, isn't it? What if I said you had 50 cents of risk and 35 cents profit? You say, geez, that's really small. All right, let's put it this way. Let's say you have $1 of risk and 75 cents of profit in a stock. Well, you're actually going to risk $1 so that you can make 75 cents. So if you lose, you're going to lose more than you even had the potential to make. You see where I'm going with this? This is so key, and yet it's overlooked. It's missed. Hey, if we don't learn this stuff, listen, I've said on here before, I'm going to say it again. When I came in to Tradeway, step one, January 2015, it's actually February, Philadelphia, I knew nothing, zero. If you're like me out there tonight and you're going, I don't really know anything either, I'm not so sure I can learn this stuff. Trust me, I am a living testimony. You can learn this system. And some of this stuff to some of us may seem obvious. Hey, to me, it wasn't. And I know I'm speaking to people out there tonight. It wasn't so obvious to you. Risk return ratio is one of those things. If I'm going to risk $1, I want to make 2. I don't want 1-to-1. I want 2-to-1, 3-to-1 or better. You say, Blair, is that really out there? It is. It is. And when I don't see that, then I can move on. I can move on to another stock. I can move on to another trade unless my emotions take over and I do something that I shouldn't do. But again, that's the broader conversation about emotions. Jeffrey answered my question here. What does FOMO mean? Some of you guys out there are still wondering. You said that, but then we never got the answer. What does it mean? Most of us probably have heard this before. It's the fear of missing out. Is missing out, the fear of missing out, a good idea, a good reason to get into a trade? No, not at all. Not at all. It has absolutely nothing to do with having an advantage in a trade, but it has everything to do with driving us to a decision to put our money at risk. So controlling our emotions is absolutely key at controlling risk, protecting our capital, which is what we talked about. Having a plan and sticking to that plan is so key in keeping emotions like FOMO and all that kind of stuff out. Greed even. Hey, I got a great profit, but I'm not going to sell. Oh, that's right. I predetermined my sell point. I've got it written down here in front of me. I've got it typed into my note. I said sell at $11. That's it. I'm out. Jeffrey says I'm a stop out robot. Stop out robot. And that's what we got to do. I mean, that's the kind of traders we've got to be. We've got to be able to do that. Now, that comes more naturally to some people than other people, right? There are certain aspects of trading. Some of us, they're just going to do it like that. And then maybe another area of trading, we've got to work a little harder. And then others, it's the opposite. Wherever we're at, this is really important stuff. And it is essential that we are working on these skills. I'm giving you guys some meat tonight, okay? Now, again, I know some of you out there are a little more experienced. You might be saying, well, this is kind of basic stuff in terms of stopping out. You already know, but I don't think you can be reminded of this enough. I don't think you can be, I'm going to say it this way, edified in controlling your emotions and trading enough. This is foundational, not just basic. It's foundational. I know it's really huge, but because it's so huge, this is massive. This is central to the trading journey, the trading career. If you want to be the CEO of your own trading business from your kitchen table, from your backyard, wherever it is that you imagine yourself doing it, because you can do it anywhere you got an internet connection. That's what's beautiful about this. Then you got to understand this stuff as well. Okay, guys. Thanks everybody for being on here tonight. I appreciate all of you being on here and sending in your questions. 2 things that I think are crucial for protecting your capital and staying in the game. Remember, as we close out tonight, that is ultimately what this is all about. This is about staying in the game. And we need to understand these concepts. I definitely want to, I'm just grabbing a link here as I'm talking because I want to invite you guys. I've mentioned this the last few weeks. David Mitchell doing his Truth Will Set You Free. This is a free session, okay? Free live session. David's never taught this online. He's going to do this. I'm popping the link in the comments, whether you are at YouTube or Facebook right now. If you're joining us on the recording, you can find that there in the comments as well. You know what? I may just go ahead and put it in there twice because I know it'll need to stand out if we come back to it a little bit later. It's free. You can sign up. He's going to teach The Truth Will Set You Free. It's a biblical teaching on, hey, what's the place of debt? What's the place of debt? It's from a business perspective. Ultimately, it's from a biblical perspective, but it's going to speak into a little bit of what we talked about tonight in terms of being the CEO of our trading business. And I think some truth that comes from the Word of God that can liberate and empower us, give us a different perspective. You get a chance to listen to Mr. David Mitchell himself, our CEO and founder here at Tradeway, has over 30 years of trading and investing and business experience. So it's always a pleasure to hear from him. You can jump on in there just by clicking on that link, sign up. There's no charge for this class. You can come and join us for free. Now, he does normally charge for this class. When I first took this class, I paid for it. So you get to join us for free. And that's one of the beauties of being able to do this online. So thank you guys so much for being with me once again on Market Monday. This is what we do. This is what we do. I am here to help you win in the markets, have a better understanding of how you can stay in the game. I don't want you to just be in the game. I want you to crush when you're in this game. That's a phrase we like to use in trading. Man, this trade crushed. It's a good thing. It's not a bad thing. That's what I want for you, empowering you to be the CEO of your trading business. And with that said, don't forget, Tuesday, Wednesday, Thursday, we're back. We got a trading tip Tuesday coming up tomorrow. Word Wednesday, easy to remember, isn't it? Word Wednesday, Jeffrey Nance is going to be preaching for us on Wednesday. And then Thursday, I'm back with Stock Talk Thursday. This week, we're going to dive into Bitcoin. Bitcoin on Thursday. Man, it just seems like it's going higher, 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 higher. What do I need to know about Bitcoin? I think it's time we return back to that conversation. So we're going to be looking at Bitcoin on Thursday. That's Stock Talk Thursday. And of course, that program is always geared at me helping you know, hey, is this hot or not? And sometimes when we think it's not, I actually think it's hot. And sometimes when we think it's hot, I say, ooh, not for me. Not. Why? Because you guys know now you've got to manage the risk. That's the number one thing that a trader's got to do. So we're going to look at that on Thursday. Thank you guys so much for being with me. We'll see you tomorrow. Good night.